Hi, I'm Ryan Dieter with Key Realty here. Welcome back to another monthly market update. We're looking at the numbers for September of 2022. We're here at the end of October, so we always get about 20 days behind before we actually get the data in. So we're going to look at the data. We're going to go through it. We're going to talk about it. But let's jump right into it. The big number that you're going to see on the headlines moving forward in the next few weeks are going to be the drop in the number of sales year over year. So last September, we saw, or this September, the numbers are showing a 20% drop in sales. Now that sounds scary. It sounds like, oh my gosh, the market's falling apart. But if you actually put in some context of pre-pandemic numbers, we actually sold 34 more houses in 2022 than we did in 2019. And no one was really panicking in 2019. It's just when you go from these inflated numbers from the pandemic and low, super low interest rates in the threes, we had a lot of buyers that just flooded the market in the last few years. Those buyers have stepped back. A lot of the buyers that were flooding the market, and now we have just your normal buyers that are, kind of the normal people that need to move, need to buy houses, not just the people that really wanted to because interest rates was so low. So that's what we're seeing. I know you're going to see the headlines. You're going to see the sales are down, the market's crashing. Here we are. Not so much because the reality is that there's still a 10% appreciation rate this month. The 9.9% average sale price increase from year over year. So, I don't see how you can say the market's crashing if the prices are still going up year over year. Now, month to month, we're going to see a dip, but that's normal. Every year we see that this time of year. Every month until winter, until spring hits, the prices probably will take a step backwards compared to last month. I think it's down $6,000, the average price point, if you look at August of 2020 compared to September. You're looking at about a $6,000 difference in average price point. So not a huge number there, not like, we're dropping significantly, but it is going backwards. And I will admit there's a lot going on in the market. There's a lot of factors, a lot of unknowns, and until we see that year over year dip is where I would say we're not really in a down market, really prices aren't going backwards until we see that year over year. So something to keep in mind, we're going to start seeing month over month the next few months dips. And so the hard part about this is trying to time the market. A lot of people right now are trying to wait, maybe time the market, and we don't get this data for about a month after the month into the next month. And so what's going to happen is, watch the spring really closely, but as soon as we start seeing the numbers tick up again, it's almost too late. So that's where it's hard to try to play the market. But I would, if you're looking at, sitting out right now and you're kind of thinking about maybe when the right time is, something to really watch is early spring when numbers, are the spring market. That's when things typically take off and really shoot up in price points and the average price points for a lot of factors. But that's where I'd be watching really closely. Really watch that March, early March, maybe late February, see where the numbers are there and what's the trend. Some things I am keeping an eye on right now are days on market are increasing. We went from 14 to 18 year over year. Last month we were at, what were we at last month here? Let me pull it up. August 22. Last month we were at 15. So a couple more days on the market. And so those are things to think about. Inventory has gone up as well. So we're seeing inventory go up since there's less sales, less in contracts. We're seeing the inventory creep up, and we use what's called a month supply of inventory is kind of track this. Is basically how long would it take if no new houses went on the market? How long would it take to get to zero? We're looking at this month at 1.3. September of 2019, we're at 1.9. So we're still well below that same mark in 2019. Days on market in 2019 were 28. We're at 18. So things are still selling much faster. They're just not selling quite as fast as they have the last few years. But we got so used to that's where the headlines, where the stories, where the news is going to run with that because it makes a good headline of the things are just falling apart. But we were so accelerated so high so quickly, and people just think that's normal and that's going to stay there. Yeah, we couldn't sustain what we've seen the last 2 years. So we're kind of getting back into a quote unquote normal market, but a little bit more stable market in a sense for buyers and sellers. And so, the big things that I'm looking at are, still, we still want to take on, how many homes are selling. We're seeing to see that slow down. New inventory is not skyrocketing. That's the thing I really want to focus on when it comes to, is the market going to continue to dip and go backwards year over year? Is that we really don't have a flood of inventory. Inventory is ticking up, but it's not flooding the market. In 2008 to 2010, that's what happened, is that, the market got flooded with a lot of new homes in foreclosure and other factors, and people losing their jobs, having to sell their house. And the reality is that there's so much equity out there, and there's people don't have to sell their house. And so there's not a whole lot of foreclosures. We know the job market's still very strong. People aren't just losing jobs left and right where they have to sell their house or can't afford to pay their monthly payment. When they locked in a 30-year fix at 3% interest, that payment's fairly low. The trouble with that is that, at 3% interest, it makes it hard to move on and to sell their house and to buy another house, because at 3% interest, your payment's so low, and now all of a sudden interest rates are around 6 to 7%. Even if you're trying to move on, that payment is going to be significantly higher for the same house even. So that's what's difficult. And so if you're trying to buy a bigger house, more expensive house, then that payment's going to be even higher, and things like that. So that's where I think that the inventory is going to start, stagnating here, the next few months especially. And as long as interest rates stay high, it's really going to keep people from really wanting to do that. But the people that have to still will. People who are, losing, getting jobs, having babies, getting married, that need to buy a house and want to, really have a reason to get into a house, are going to make that move, and they're going to find a way to do it. And I've made other videos. I actually just recorded a video of how to maneuver the interest rates in this market just previously. If you want to watch that, please go back and look at the videos. But it's a very useful video in a sense of how to get a lower interest rate than what you think you may be able to in this market. So with that said, I don't want to dwell on this too much, but I am watching this closely. I would watch, kind of the next few months very, very closely, as there's a lot of, just stuff in the air when it comes to the markets, and outside of real estate, especially the things that impact the market, inflation, and just things like that, with the other markets crashing and things like, there's just a lot of stuff going on. But those things also are both positives and negatives for the housing market. For example, inflation actually can stabilize the housing market, because it actually makes your house more expensive, because that's what inflation does. It makes things more expensive. And if you have a house, that actually can be useful to hedge against inflation. And then the other, the stock market not doing great is, investors are going to see that and say, well, where else can I put my money? In the housing market. So we still have some investors that are heavily focused on the housing market. So there's things out there that are, both scary when you're considering that real estate market, and, do I want to make a move right now? But also things that are pushing people towards the housing market and doing things within the housing market. So with that said, if you want to chat about your own individual needs, you want to chat about this a little bit more, I am more than happy. Please feel free to reach out, email, call, text. I would be happy to have a conversation with you to see if there's anything that I can help with. Thanks.